Hey, thanks for tuning in to an episode of Listen to Larry with your host, Larry Bammer, One Real Mortgage.
And there, if I
until they either refinance or something.
Western work ethic.
something that I like to do,
You need my help.
I maybe
Happy to be here.
do. Like, oh my gosh.
having you.
60-day rent back for free. Hey, thanks for joining me today, Jerad. I appreciate it. This is an important topic for both of us.
It is.
Me because I had so much family in the military, and you because you were a bartender and served law in the military.
Yeah. Wait, what the hell did you Let's restart that.
And-
bartender what?
So you were actually in the military.
Yes. Yeah, I did 5 years in the Marine Corps.
And how many tours?
2. To Iraq.
Was one of them the Eras tour?
It was me and Tay Tay are good friends.
Phew. Can you introduce me to
Shake it off.
Kelsey? Okay, now that we've broken the ice, we're here to talk today about VA loans. And there's a lot of questions that we put out there and asked the people and got back some really, really good questions. So we're going to dive into each of those questions today, starting with what's the difference between a VA loan and a conventional and an FHA loan?
Well, the biggest difference is that the VA loan doesn't have any mortgage insurance whatsoever. And obviously it's only available to veterans and active duty military members. But the biggest difference is that the VA guarantees a portion of the loan so that the lender doesn't have to charge mortgage insurance. There's less risk for the lender.
But I've also heard that conventional loans, if you put down 20%, you don't have mortgage insurance.
That is true. But the VA loan will generally have lower interest than a conventional loan will.
Like by a little bit or by a pretty good amount?
Usually by a pretty good amount. Like right now, it's generally speaking, it's about 1% lower than a conventional loan.
Wow.
Maybe even a little bit more.
Wow. Yeah, that's a big deal. So the difference between, I guess, if you're paralleling FHA and VA, they both are very low down, but you can't get an FHA for 100%, and a lot of the VA loans are 100% financing.
Yep. So you can do 100% financing on a VA loan with no mortgage insurance, and an FHA loan always has mortgage insurance. There's no getting around mortgage insurance on an FHA loan.
Everyone wants their take.
Yep.
You mentioned something that made me think of it. So you said you don't have it for FHA, but there's something that you pay for a VA loan.
Yes.
So they both have, when FHA has a monthly payment, but they also slap you with a
Upfront mortgage insurance.
Premium.
Yep.
And the VA has something similar. They just don't call it that.
Yeah, so the VA calls it a funding fee, and it's only applicable if you don't have a disability rating. If you have any disability rating over 10%, that gets waived for all veterans. But yes, if you don't have a disability rating, there is an upfront funding fee, which goes anywhere from 2.3% to 3.3%, depending on whether you've ever used the VA loan before or not.
So that answers one of my questions that came from Susie in Florida. Susie was asking if they've already used it once before, can they actually use it again?
So you can. So there's a couple different ways to use it. So you can sell your home and reuse it as many times as you want. Obviously, you can reinstate your entitlement. But there is something called bonus entitlement, where you can actually have multiple VA loans at once. I have a borrower right now that just purchased his third home using a VA loan. This will be his third active VA loan. So there is a bonus entitlement that a lot of people don't know about and don't know how it works. That's super valuable.
So you're not saying that, I got a VA loan. I sold my VA loan. I got a VA loan. I sold my VA loan.
Yeah,
You're saying I got a VA loan. I still had the ability to get with bonus entitlement. I kept that first place. Then I got another one, got a VA loan on that. And then they kept the second one, and they had enough entitlement to get a third VA loan.
Especially in high cost of living areas. So there's a big misconception, actually, that you have to either refinance out of your existing VA loan or sell your house to
another veteran
to get another VA loan. Or there's something called a loan assumption with VA loans, which we can get into as well. But a lot of people think you have to close out your first VA loan essentially to get another one, and that's just not true. You can there's a whole formula, and it gets pretty detailed. But any mortgage professional that's experienced with VA loans should be able to tell you whether you have any remaining entitlement or not. And it's based off of county loan limits and how much entitlement you've used, and there's a lot of formulas on it, or a lot of moving parts to it. But most people are eligible unless you bought a very high priced home
first time out.
For your first time out, then you're usually eligible for bonus entitlement.
So if I bought it the first time, and then let's say I'm in an area where there's a base, so my buyer pool is probably going to be another veteran. If I had a smoking good deal, if I found another veteran to buy it with a VA loan, what's this loan assumption?
So loan assumption is it's applicable for civilians and veterans. It's a lot better for the person selling their house if it's another veteran that takes over the loan, because they get their entitlement back. If you let a civilian assume your loan, then what happens is your entitlement stays tied up in that loan until they either refinance or sell the house, and you can't purchase another loan, where you have to use your bonus entitlement to purchase another VA loan if you have enough entitlement left. But if a veteran assumes your loan, basically what they do is they substitute their entitlement for yours, and they take over the rate. Obviously, if you bought your house 2 years ago, you're probably in the 2s or 3s on a VA loan.
Yeah.
If you buy it now, you're probably in the 6s. So if I were to sell my house to you, if you were another veteran and I were to sell my house to you and let you assume the loan, you could take over my 2 or 3% interest rate that I got 2 years ago, which is obviously super valuable.
Yeah. So if you're a realtor and you're listening to this, that's probably something you really, really want to look into and speak to your homeowners, your sellers that are veterans, because marketing that home additionally to veterans, what the rate is, would be really, really invaluable. I'd imagine, especially if you're anywhere 30 minutes to a base. A lot of you that are friends of mine, out of state realtors, you are. Going back to your client that has that's used it now 3 times.
Yeah, he's actually a good friend of mine.
You served with him.
I served with him. 2 tours in Iraq with him.
Wow.
Yeah.
You're not going to have 3 primary residences.
Correct. So you cannot purchase a home using a VA loan as an investment property.
So,
So
walk me through this. Okay. He buys the first home. Obviously, he's going to live there. It's his primary residence. Circumstances change, and he's moving.
Yep.
But he's going to keep his first house.
Correct.
He's now going to buy house number 2 with a VA loan. And you're saying the VA loan that he has on the first house, which is a primary, you can't use it for investment property. So how did that convert? How did that happen?
So you can buy a house as a primary residence, and then if a change in your life happens, such as in his case, he got married. So he bought a small condo in 2015 or 16. He got married in 2019, and that condo wasn't big enough for them. They wanted to expand. They wanted to build a family. The condo wasn't big enough for him. He'd been in that house for a couple of years. He had plenty of bonus entitlement left, so they purchased a single-family residence. You can keep your VA loan on your the residence that you had. There's no.
They're not going to punish you.
They're not going to punish you for wanting to upgrade your living situation.
That makes sense.
So you don't have to refinance. You don't have to do anything. He had plenty of entitlement left. He purchased a single family residence for, I think, almost double what his condo was, and they moved into it. And then in 2022, they have 2 kids. They needed a house with 4 bedrooms. This is up in Washington State, and he was able to. He had enough entitlement. The loan limits had increased enough. He was in a high cost of living county, and he was able to purchase another home with no money down.
I love it. I'm in Tom Ferry business coaching. He coaches realtors, but I'm in there to glean what I can so I can help my realtor partners. And they have something that's like the 5 or 7 Ds of why you'd be selling, and death, divorce, diamond, which is the ring, diapers, which jokingly it's not me in diapers.
Yet.
It's kids, like having kids. I'm gonna add a D to that list from now on, and call it deployment.
Oh, yeah.
Yeah.
Good one.
So we answered. Can you buy with a VA loan? Buy an investment property? The answer is no. But if the circumstances change and you're buying a new primary residence and you're flipping your old home as a rental, they're not going to punish you for it. You can keep that VA loan.
And you can actually use that rental income, the expected rental income, as income as well.
To qualify more.
Qualify for your new home.
Yeah. This is where it takes a professional lender, like you're saying, like you or I, or the team that you run,
Yep.
To do the math right.
The whole team is very well trained on how to utilize a VA loan and all the ins and outs in it. Because VA loans are probably the most misunderstood loan that's out there.
Yeah, which is why we're so passionate about getting this information out there, so that you military veterans can take advantage of this.
Absolutely.
That you deserve. I have
my passion.
I have a question. It came from Tom. We'll say Tom from Texas. He's from a smaller town in Texas. Tom wanted to know if he could buy land in Texas with his VA loan.
So this is actually one of those big misconceptions. Yes, you can. So you can do a VA construction to perm loan. You have to be building a home on the loan. You can't buy empty land and just leave it empty. But you can use the VA loan to build a new house. It's called a VA construction loan, and the only caveat is that the home has to be completed, and up to VA standards by the time that the loan runs up. They have to refinance.
So you cannot buy like agriculture, like raw land with no plans to actually build on it.
Correct.
But you can buy land and build collectively together.
Yep.
Like
you can do modular, you can do manufactured, you can do any type of housing. As long as it's up to code, you can buy land and put a manufactured home on it, or have a modular home built on it, or build a single family residence, whatever you like. You up to 4 units, so you can do construction up to 4 units on a VA loan, which is another thing that a lot of people don't understand about the multi-units with VA loans, because you can do that. But you can, as long as you're building a habitable building, you can do that.
You know, when you said ground up to perm, you meant permanent.
Yes.
But when you said ground up to perm, I had a vision of you with a big head of hair, permed like in the 80s.
Those days are long gone.
Yeah,
and I used to have that perm, but
if you're listening to us,
long gone.
If you're listening to us, you don't understand why I brought that up. If you're watching, you can see I'm sitting next to Mr. Clean.
With a bigger head.
I have a question.
Yeah. I have answers.
Okay. Can you buy new construction?
Yeah, absolutely.
There's a lot of people out there right now. A lot in Texas, which shout out to Texas. I'm also building there. Can you buy new construction? Like you were talking about, like buying land and building.
Mm-hmm.
I want to make sure everyone knows
You're talking from the builder.
From the builder. You don't need to use the builder's lender. You can use us and get a VA loan for your brand new construction.
100%. And usually you're going to get much better terms through outside lender than you will through the builder's lender.
I actually know in Texas, there's a fancy new style of home coming out. Have you heard of the Barndominium?
You were talking about that.
Yeah.
It sounds pretty interesting. I'm going to have to look this up.
It is. Yes. The Barndominiums, you can actually use the VA loan to buy a Barndominium. Now, you may have a little hurdle to get through, depending on the value, looking at comps and the value of the property.
That's going to be the hardest thing. With a VA loan, there has to be comps in the area. So, I mean, if you're the only Barndominium within, 3 miles, it's going to be hard to get somebody to underwrite it because there's no comps in the area for it. But if it's at least somewhat normal in the area, absolutely, as long as there's comps to support it.
You know what? You brought up a topic about value with the Barndominium, value and needing to be appraised. Walk me through.
Start that over because I was wiping my nose.
You brought up when we were bringing up the Barndominium thing. You talked about value and appraisals. I know from 18 years in being in the industry, there's a concern by some.
Yep.
It's unfortunate.
Unfounded.
About the VA appraisal.
Yeah.
Let's dispel those myths. What's the problem that some sellers, listing agents have with the VA appraisal?
So there's a lot of misconceptions out there with the VA appraisal, but the biggest one is that if it doesn't come in at value, you're basically done, which is 100% not true. You have more appeal options with a VA appraisal than you do with any other appraisal. So you can do a reconsideration of value.
Tidewater.
Tidewater. Tidewater is the first thing you do, basically. So if the appraised value comes in low, the first thing the appraiser has to do is notify the lender that it's coming in low and ask if they want to initiate Tidewater. And to initiate Tidewater just basically means that the appraiser can't find comps to support the value that the house is being sold at. And so they ask the realtors, specifically the buyers and selling realtor, to help them get better comps. So so what they do is they send out there's a Tidewater form. You fill it out with the comps that you think best support the valuation, and send it over to the appraiser. The appraiser will then go through those and find out if they're good comps or not, and hopefully it'll help. You can also bring up things that they may have missed, like square footage or whatever the case is. You can talk with the appraiser and kind of get a better, hopefully bring up things that will help the value. Failing that, you can actually do a reconsideration of value directly with the VA, and that's a process that you basically write to the VA and explain why you think that the appraiser's wrong, and the VA will make a determination on whether they think that the house supports the value.
And if neither of those work out successfully, there's still two other options. One, you negotiate down the price.
Yep.
With the seller, which the seller may or may not initially want to do. But if you're the only offer out there, which is kind of the market we're in a little bit, you probably can. Or can a veteran getting a VA loan get gift money?
They can. Unlimited gift funds.
So let's say it doesn't
from a close friend or a relative.
So let's say it doesn't appraise for $10,000-$15,000. I could go out, close friend, my relative, and get that additional $15K or $10K, whatever it needed to close.
Absolutely.
So, Steve
Louisiana.
Steve from Louisiana is
right? LA.
Yeah, Steve from Louisiana is asking right now, can you use a VA home loan when you have bad credit?
So yeah, that's another misconception that a lot of people do. So a lot of people will go apply with the lender and get turned down because they're told they don't have good enough credit. That's a lender overlay. There's no such thing as a credit limit on VA loans.
So let me. I want to dive into this because this is an important one.
Yeah, it's big and important.
Yeah. So you said lender overlay. This is where I think the difference between a retail and a wholesale lender
100%.
makes all the difference in the world.
This is where it comes in big.
What I mean is, if you're a retail lender, retail shop, how many VA loans do you have?
One.
You've got
Usually
one.
one.
And if that one has some type of credit score minimum for the VA, that's it.
Yeah. So what I usually refer to it as is a box. So when you're like going to a retail lender, I'm not going to name any names, but if you go to any of the big name retail lenders, they have a box that they want you to fit in, whether that's a 620 credit score or a 580 credit score or a debt to income ratio below 50%. Those are guidelines that the lender made up, or that the lender's investors made up. That's the investor's risk tolerance. That is not set by the VA. The VA has no minimum credit score. It has no maximum debt to income ratio.
So
The VA cares about residual income.
So
And there's a
Jerad,
residual income chart.
how many VA loan products do we have on the team?
I don't even know. Pretty much unlimited.
I'd say over 100.
Over 100, yeah.
100.
We have over 100 different lenders that all have multiple products.
Yeah.
I mean, there's manual underwrites, there's VA construction to perm, there's manufacturer, we have lenders that will go as low as a 4. I think we have one that goes down to a 460 now. Wow. Credit score. Obviously, there's going to be caveats to that.
It might require a down payment.
You can't go in with 10 things in collections and not paying your bills, obviously. But as long as you're starting to reestablish satisfactory credit.
Yeah.
Like there's lenders that will do it because they're really on a VA loan, like we said before, there really is no risk there's risk for a lender, obviously, but the VA guarantees 25%. And that's the other thing a lot of people don't understand is that a lot of people think the VA is the one that actually gives these loans. They're not.
It's true.
It's a lender. The lender is the one it's just like a normal loan in every respect, except for, like, as far as you're concerned, it's the same thing as a normal loan, except for you don't have to pay mortgage insurance, and that the VA is actually guaranteeing the lender that they will cover 25% of that debt if the veteran defaults.
So that's a good point. So when our clients are making their monthly payment, they're not paying the VA.
They're not paying.
They're paying.
You're paying whatever lender it is that
They're paying Freedom. They're paying American. They're paying UWM. They're paying one of our 100 different lenders we could take their loan to. So if you have bad credit and you've been denied by your lender, your retail lender, please
check the wholesale channel.
Go to lbammer@emortgagecapital.com.
Or J. Brannen at emortgagecapital.com.
Do you understand what I'm saying? That's important. Thank you for clarifying that.
That's a big one. And I mean, like I said, there's so many people that qualified. I talk to people all the time that were turned down. Like I have one literally right now that I'm working on down in Texas, in Waco. Yeah, Waco. Austin. They were told by the builder that they didn't qualify for a loan, and they were just about to give up. And one of my realtor partners that I've worked with in the past reached out to me, and he's like, "Hey, he's being told he doesn't qualify for a home. Mm-hmm. He's a Air Force veteran. He's like, he's being told he doesn't qualify for a home by the builder's lender, and they're denying him. And the house is almost done. And his score dropped. He had a 590 when he applied. His score dropped below 580, and that lender has an overlay of 580. And they told him that he no longer qualifies for a VA loan. No banks are going to tell you that you don't qualify with them. They're going to tell you that you don't qualify and hope that you get your score up and come back to them, because they're not going to send it to their competitors. So my realtor reached out to me. He's got a 567 now, I believe, right around there. And we're going to be closing on his house in about a week.
I love it. Congratulations, and thank you for your service if you're listening. You said like tons of people qualifying. I had a scenario where the mom was looking to buy a house and her income wasn't sufficient enough. So she was going to reach out. I asked, hey, do you have any co-borrowers? Whatever you can use. Oh, yeah, my son. And we'll use his VA benefit. That's not going to work, right?
Yeah. Well, not unless the son's going to be living in the house as well.
True.
Yeah.
Then he's owner. It's his primary residence.
Yeah. You can't use families. So the only time you can use a family member's eligibility is if you're a surviving spouse. And the veteran died of a service-connected disability.
Got it.
So you like if you're married to a veteran who had eligibility and he passes away of natural causes, you still can't use his eligibility.
Oh.
But if he was a disabled veteran and he passes away of something connected to his service-related disability, then as a surviving spouse you can buy a home. But as a like just a normal family member without the veteran living there, no, you can't. Yeah, that's the one thing. It's for veterans. It's made for veterans.
Yeah.
Not their families.
Well, it's an unfortunate scenario, but if you are a surviving spouse and you're listening to this and you're renting right now, as he said, reach out. We'd like to see if there's a scenario where we can put you into a home. So that's a great one. Are there any other VA loan requirements? Because you've talked about the credit score can be low. You can use it for spouse. You can use it for primary residence. You can leave your departing residence, and you can buy another primary residence with it with
You can buy
bonus
your
entitlement.
Barndominium.
You can buy a car.
You can buy your Barndominium.
Oh, Barndominium. You can buy a Barndominium.
Is this thing on? There you go.
Yeah. How about this is a good one. What is the debt to income max on a conventional loan? This is a pop quiz.
49.99.
What is it for FHA?
56.99.
What is it for VA?
There is no debt to income limit.
How about that, people?
VA goes off of what's called residual income. And what that is your income that you have left over after paying all of your bills. So it doesn't go off of a debt. It's a dollar amount. It's not a percentage of your income. So as long as and you can look these up, every region has a different, and depending on how many kids you have and how many people live in the household, the residual income requirements are different. There's, Southwest, Northwest regions, all of that. They all have different cost of living. So they put out this chart every year. But as long as you have what the VA considers to be enough money to live off of after paying your bills, there's no debt to income ratio. That's how they qualify. That's how you get qualified. I've closed VA loans with a 70% debt to income ratio on paper.
Wow.
Compensating factors.
So again, if you're talking to someone in the retail lending space and your lender is telling you, no, you don't qualify for a VA loan because your debt to income is too high, another reason to reach out to us.
Yeah. I mean, I came from the retail world. I started my career in a retail shop, and these are the things that I told my customers because I didn't know any better. And it's one of the reasons that when I started realizing all the stuff that I actually could do to help veterans, it's one of the reasons I left retail, because I can help so many more people now than I could before when I was there. I legitimately thought that you couldn't go above 50% debt to income ratio on a VA loan. I thought you had to have a 580 credit score from the VA, because these are the things that I was told when I worked at a retail lender that you had to have. And I had just started out my career, and so I just believed it. And most loan officers believe it. They don't take the time to research it and actually educate themselves on what the actual benefits and qualifications and everything that go into purchasing or using your VA loan benefits. And it's changed my outlook on lending, because I can help so many more people now that deserve it, that may have had, a bad year a couple of years ago during COVID. I think that's a big one. Like, people have bad credit because during COVID they lost their job or they got laid off or whatever the case is.
But more on the credit card, couldn't pay it. Yeah.
Yeah, but they've they're good people. They had great credit their whole life. They've reestablished themselves, but obviously credit scores don't bounce back overnight or even over a year. So some of them have worse credit than they should, and I can help them now.
Yeah.
We can help them.
I love it. And it's a client that we want to help. So thanks for tuning in. Thanks for watching. Thanks for listening to our podcast. If you're on YouTube, like and subscribe.
Down below.
Yeah. And thanks.
Smash that like button.
If you're looking to buy or sell real estate, this is the podcast that you want to listen to. My name is Larry Bammer with One Real Mortgage, and I have great professionals here to interview to educate you on what's going on in the market.